Okay guys, so you know my stance on Palantir. While I am bullish on the company and their future, I'm not so bullish when it comes to their actual stock and valuation. But in this video, I want to do something different. I actually feel like maybe I'm missing something here with Palantir stock because so many of you in the comments are so bullish on this stock, and who knows, maybe I've been a bit close-minded on this and I want to hear more perspectives. So I'm hoping that in this video, you will take the time to comment down below with your strongest bull thesis here for Palantir, where you see the stock going, maybe even throw in some price predictions that you have and try to justify it to kind of, convince me in a sense that it makes sense as a good long-term investment. And what I will also do in return is share with you some of my personal research, some projections that I made, and why I just can't get these stars to align with this stock. And who knows, maybe you guys can help me see the daylight with this and finally buy into Palantir. So I hope you enjoy this different style of video. I've never really done something like this where I've had as much of an open discussion as possible on this sort of platform. So comment down below, drop a like as well, and subscribe if you're brand new to the channel, because I hope to do more of these topics with you guys with other stocks that we don't really see eye to eye on. Okay, so now before I get into my Palantir prediction, I want to actually address something real quick. Many of you left comments on my previous videos saying, how could you invest in a company like Tesla with valuations sky high in that stock and then look at Palantir and say that it's overvalued? It's very hypocritical of me. I'm being closed-minded on that and all that stuff. And here's the thing. When it comes to Tesla, I was buying Tesla heavy back when the valuation made sense. My cost based on Tesla is around $55 per share. So keep that in mind when you say that I'm bullish on Tesla and I don't care about Tesla's valuation. That's not necessarily true, because my cost basis is at a valuation that actually made a whole bunch of sense. But I also want to really throw a point out there which is very important. It's a type of businesses that these two companies are, Tesla and Palantir. They're very different type of companies, and drawing comparisons saying that Palantir is the next Tesla or Palantir is going to see the same kind of growth trajectory as Tesla has, I think it's very misleading, very incorrect in my opinion, and I'm going to explain why. So here's the thing. Tesla is a consumer-facing business with, very minimal enterprise, if any. I don't believe they really have anything right now that's enterprise, but maybe in the future they will. Whereas Palantir is the complete opposite. They are pretty much all enterprise, and I don't believe they have any consumer-facing products right now, and maybe in the future they will. Now you may be wondering, why does it matter that Palantir is an enterprise company and Tesla is a consumer-facing company? Well, here's the top 15 businesses in the world by market cap, and do you notice anything by looking at this? All of these companies except Berkshire Hathaway are consumer-facing brands. Heck, even Berkshire has big parts of their business as consumer-facing, like Geico. The point is that these brands are known and recognized by the general public, which leads to more interest, more money flows, because they provide a product or service that the general population, like you and I, use. So I think that this is actually very important and overlooked by so many investors that are bullish on Palantir. While this may have a lot of growth ahead of it, can the stock actually be a top 15 company in the near future? I think that's highly unlikely. Maybe over the long term, possibly. But it should make you question, why aren't some of these large enterprise companies out there in the top 15? Do they even have a possibility of getting there? I don't know the answer to that. And when I look at Palantir's valuation today, which is around $50 billion, give or take, it's hard for me to justify something like a 10x in this stock, which is what I saw in Tesla, because that would put the company at around a $500 billion market cap. That would make it one of the largest companies in the world. And like I said, the stats just don't support that right now. Of course, things can change. Of course, this is open, to being disrupted in the future where enterprise companies maybe are the top. But if you're asking me what my opinion is on this topic, I think that consumer-facing brands will probably still maintain the top positions for the largest businesses out there. Now, here's the thing. You can argue companies like Amazon, Microsoft, Nvidia, they have massive chunks of their business coming from enterprise customers. They deal with AWS, for example. That's all enterprise. Azure, that's enterprise. Nvidia sells their chips to data centers, enterprise. So they do have a good chunk of enterprise, and that's definitely helped them get to the top because they have a good balance of both. However, I think that for Palantir's market, I think that for what Palantir is today and what I see the company growing into in the future, it's very unlikely, in my opinion, to see this as a $500 billion company over the next 5 to 10 years. Again, it's possible. I'm not here to say that that's not going to happen. It's possible. But statistically, it doesn't really support that. Okay, so let's talk about Palantir now. Okay, so this business is amazing. It's a really well-run company. They have a huge pool of great talent and engineers working for them. They're pretty much a hyper-growth business growing massively year over year. They have top-of-the-line technology, like world-class technology, cutting-edge technology. They have like a cult-like following. If you read the comments in any of my Palantir videos, if I ever suggest anything negative about the stock, read the comments, you will see a cult-like following. And I've seen this sort of similar mindset in stocks like NIO and Tesla previously. But all this being said, everything's positive, everything's good. The bottom line though, for me, is that valuations still matter, and the valuations just don't make sense right now for Palantir. Generally, when I get into these investments, I look for a 1-year forward price to sales of around a 10. Now, plus or minus a little bit's okay, but if it's something much more than a 10, I'm typically not interested. If it's something much less than a 10, I typically am very interested. Now, using this sort of guideline, I've found some of my best winners. Tesla, I bought this at a price to sales of 2. Believe it or not, it was around a 2 price to sales. And that's provided me around 1,400% return. NIO, another big winner in my portfolio, up around 800%, and I believe this was also around a 2 to 3, somewhere around there, when I bought in. Now, those were extremely rare opportunities. I don't expect to see those opportunities again with those stocks or with Palantir either. However, what I have learned going through all of these years of investing and kind of being patient is that you gotta wait for the right opportunity and not just rush in and FOMO into stocks. Because if you really want to see those massive returns, hundreds of percents of returns, patience will reward you. And when that opportunity comes along, you gotta go in after you've done your research. So now what I want to do is actually share with you some of my projections for Palantir when it comes to their price of sales and revenue growth. And you guys let me know what you think. So taken directly from Palantir's earnings, they expect $4 billion in revenue in 2025. So we have a baseline here for what we can work with. And they also said that they expect 30% year over year in 2021. So now this is what my revenue projections look like for Palantir, assuming that we see 30% growth year over year and assuming this continues, let's say, until the end of 2025. And then after that, it drops to around 25% year over year for the next few years. This, of course, is pretty strong growth, fairly exponential, and I have no doubt that Palantir will actually hit or even slightly exceed these expectations. Now, assuming today's market cap of around $50 billion, I calculated what the price of sales would be on a year-to-year basis compared with our projections. Here we see the projections, and it is high. 2021 expect to be around a 35 price of sales. Remember, I'm looking for a 10 or below. Then we see it drop every year, and we only hit my target of 10 price of sales by 2026. This means if I want to pay a 10x for Palantir stock based on my estimates of their growth, I am paying 6 years in advance for valuations to make sense. That is a hard pill to swallow for me, and that is just too far out for me to accurately predict a business. A lot can change in the next 6 years. Who knows what kind of economy we'll be in the next 6 years. So to make a bet today to justify valuation in 6 years, unless I'm able to touch and feel the product and get that conviction where I have with stocks like Tesla, it's a very hard sell for me. Now, like I said, in most cases, I look at 1 year for price sales of around a 10. In some cases, some stocks, which are high growth like Palantir, I will consider 2 years out because that is still a reasonable time frame in my opinion. But the problem is with Palantir, even 2 years out is well over a 20 price of sales. So I just cannot justify this metric. But who knows, maybe I'm being too conservative. But the bottom line is I did use their own guidance and their own estimates that the company published. But that being said, let's say I be a bit more optimistic. Assuming 40% growth for the first few years and then dropping it to around 30%, we can see the price to sales did drop, but it only pulls our desired price sales of 10 back by 1 year. So I'm still paying for earnings 5 years out. So guys, this is exactly where I'm struggling. I just can't get past this. Like I said, don't gonna sell me on the technology that they have because I know they have great technology. It's just that their metrics do not justify the valuation today. And I know a lot of you are bullish, and I know a lot of you do see a vision for the stock being much higher in the future, but I want to hear why. Back when we had the dot-com bubble back in 2000, so many companies were at sky-high valuations because the future looked strong for them. And guess what happened? A lot of those businesses, they saw their stock price decline significantly, only to get back to those valuations a decade or decade and a half, sometimes even 2 decades or more later. The point I'm trying to make across is just because a stock has a bright future when you're looking 10 years out, it does not justify buying it at any valuation today. That's just my stance on this topic. Also keep in mind, Palantir is a riskier investment in the sense that they are a business that loses a lot of money. I don't think that's really going to have any material impact on the business surviving over time. I don't think that's really a concern. However, you are technically buying a business for its profits, right? And eventually it does have to yield you some good profits. And while their metrics are trending higher, it's still going to be a long time before this provides us massive profits. So because of that, because of the additional risk here of the business losing money, the valuation so high, I want a price to sales of around a 10. I'll do a little bit above a 10, but around a 10. Now I looked at CRM, Salesforce, which is an enterprise stock as well, and I love this company. And what I did here was I looked at their metrics, I looked at their price to sales, and you can see it's consistently been around a 10 or a lower, despite having very strong growth as well. This is a business that grows between 20 and 30% year over year. So just keep that in mind. It is enterprise, it is massive, but it's still not in the top 15 and they still have strong growth. So the question is, why would I pay 3 times as much in the price to sales metric for Palantir when a business like Salesforce offers me much less risk, much more stability, strong growth ahead, and a much better valuation, arguably? I don't know. I'm struggling with that, and that is exactly where I need your help. So please take a second, leave a comment down below. If you can, hit the like button to offset all the haters on this video, because there's a lot of people that just choose not to listen and just, watch the first 5 seconds of the video and comment something negative. Guys, I know for those of you watching, you guys are true investors. So just comment down below and say the word Salesforce. Say the word Salesforce so I know that you watched to the end of the video, and I will definitely make sure that I prioritize your comment and take the time to comment on your comment, because I know that you've taken the time to watch this video. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.